All right. Hello, everybody. This is Glenn Lytle with Freeland Ventures. Hope everybody's doing okay today. Welcome to the second Ohio Landlord Association meeting. Certainly a lot can happen in a month, obviously. A month ago, we were all sitting around toasting some adult beverages at Fatheads, and now we're all sitting around trying to keep the kids out of the home office while we're trying to get stuff done. So I hope that everybody is joining us here in good spirits and healthy and somewhat keeping their sanity in the current environment. So we kind of shifted a little bit to be a little flexible and try to get relevant topics. Obviously, right now with everything going on, we feel like we've got a couple of really strong topics to share amidst the coronavirus and how it impacts the day-to-day in the real estate industry. So, we're going to actually have a David Streeter join us. If you recall, in the last session, David was one of the sponsors for the event, one of the local real estate attorneys, probably one of the more prominent in the area. And so we've asked David to come on and share. Really, we're going to cover three topics. We're going to cover, some good landlord practices in the existing environment. We're going to talk a little bit about the governor's executive order that came out, and really kind of what you really need to read into on that, because there's a little bit of, I think, misconception with that. And then depending on how much time we have there at the end, we're going to get into the actual CARES Act and as it relates to the PPP program that they've got rolled off. So without further ado, what I'd like to do is introduce David Streeter and turn things over to David. If you have questions as you come through this, please enter them into the chat box so that I can organize those and position those up to David as we punch through here. So without further ado, I want to introduce a good friend of mine, David Streeter.
All right, thanks, Glenn. Appreciate you having me today, and hopefully I can add a little bit of insight. Like you said, we're going to talk, three main points. I think with the focus being on the end, talking about the Paycheck Protection Loan as it's set forth by the SBA through the CARES Act. So we're going to start to kind of walk through these slides here. And, it doesn't matter whether you're one of the subscribers, member, or clients, or if you're on here by an invite from one of our panelists, or if you just found this on the internet. The whole idea is that we're creating a forum, to kind of get some information out there. I love dialogue and questions. So if questions pop up through here, I don't mind stopping. I don't want to just give a canned, boring presentation. I'd rather have some interaction going on and answering your questions as we get into it. So with that, the agenda, we just went through that. And so I want to talk about a little bit about, some of the myths and the truth that are out there. The idea is that everyone's tuning into their TVs at 2 o'clock every afternoon to see, what the latest update is, depending on what state. Everyone here is in Ohio, so 2 o'clock's the time when usually Governor DeWine gets on for his press conference and tells us, what's been happening and what's been, the latest and the greatest. A couple of the highlights, from this week is that he extended the stay-at-home order for another 30 days. So unless you're an essential business, you're basically shut down. Restaurants, bars, things like that are closed. Stores are still open. Essential businesses, real estate is still classified as one of them. But as long as you're maintaining the social distancing requirements and healthy and safe practices to help stop the spread of this virus, for a lot of people, it's business as usual. I think every day that passes, people are becoming more and more cautious. I'm starting to, hear of stories and people that I know personally that may be testing positive or they've been tested and they're awaiting the results. So it's actually a scary reality. So, I caution everyone to take this very seriously, moving forward, limit your interaction. I have become, a great friend of Zoom calls this week, and it's been business as usual. And throughout those Zoom calls and phone calls I've had, primarily it is from my landlord clients who are concerned as to what is really happening. And are their tenants going to pay rent? And if they don't, what can they do to help with that? You know, a couple of the truths are out there, despite what everyone thinks they're hearing, is the fact that, you know, with everything that's gone down, there's been no law, there's no regulation that says a tenant does not have to pay their rent. That's still a contractual obligation, you know, between the landlord and the tenant is still 100%, you know, obligated to pay their rent. If they don't pay their rent, they're in default of their lease. You know, so that's a truth. A myth is that, you know, that they don't have to pay. A lot of tenants, you know, are calling their landlord saying, "Hey, I just heard that I don't have to pay my rent for 9." That is 100% myth. You know, so, you know, with that, you have to think of, well, what happens if they don't pay? What can I do? And then I've encouraged all my clients and anyone that's called me, as a landlord, the best thing that you can do is reach out and try to talk to your client or communicate that with them, you know, in one form or fashion. Because if you're a landlord and you have 200 units, it's going to be nearly impossible for you to, you know, call up each and every one tenant. Maybe you're going to send them an email or a text if you're on something like AppFolio that permits you to, you know, have this mass communication with all your clients. But I think the important thing is in some manner, you need to reach out. And the purpose of the phone call needs to be that you are there to help your tenant through this crisis. You almost treat the tenant as a partner in this. You convey the message that you're going to work with the tenant, you're going to work together, and you might bend a little bit. And there are, you know, what does that mean? Because if the tenant's not going to pay, one of the primary concerns is that as a landlord, you still have maybe some debt service, you have to pay a mortgage on the property. Maybe you own the property free and clear, that. But the other thing is that you have taxes, you have insurance, you have other carrying costs and expenses. So it's important that you maintain some sort of cash flow. So I've been giving the example. Perhaps the tenant's rent is $800 a month, and they call you up and say, hey, they've been laid off. Maybe they were in the service industry, they were a waiter or a waitress, and they're just not working now. So they don't have their income coming in, and the stimulus is going to come at some point, but we don't know when. So what can you do as a landlord? Say, okay, your rent's $800 this month. If you can't pay it all, can you pay something? Maybe you pay me $400 this month. I'll take the balance of $400 and I'll defer that to a future date, and we'll pay that over time. And that's good because that preserves some sort of cash flow. It helps the tenant out a little bit. It lets you know that you want to help with them, that you're willing to work with them, and you come to that type of an agreement. But then at this, I just saw a message that somebody said there was no audio. Can everybody hear me okay?
I can hear you.
Okay. Maybe if someone can put in the chat box, I just got a text message on my phone from someone who's on here. I just want to make sure that the audience can hear us here. I'm just going to type a little chat there, so to everyone. Oh, I got to put it out to everyone. Let's wait for that to maybe bounce back in. Okay, I'm starting to get, it's funny, my text messages, I have a lot of clients on here that have my personal cell phone that are saying, okay, they can hear us. So Brian, I know you texted me and said, hopefully you can hear me now. Okay, so moving forward, let's see. So essentially what you've done is you've come to, through that conversation, an oral agreement with your tenant to defer the payment of rent. Now, as you know, being in real estate, things aren't really enforceable unless they're in writing. So if you have all these conversations with your tenants, and maybe you agree to accept half month's rent and defer, you know, the remaining balance over a period of time, the thing that you need to do is get that in writing. And I would encourage you, if you don't have a good form in place right now, talk to your local counsel, whoever your attorney is on your team, and have them draft you up a good amendment. Because first of all, it puts it in writing. Second of all, it shows down the road, you know, to a court, if you end up in front of an eviction court, that you tried right now to help that tenant. It also makes it very clear to the tenant what the terms of the agreement is. It's in black and white, it's in writing. You should make it very easy to understand, and then they sign off on it. So what I've been doing a lot under that same example, rent's $800 a month. We say that you pay, half that rent by April 10th. If they pay the $400 by April 10th, you're not going to assess any late fees or penalties, and you're not going to move forward or commence them with an eviction. And then you state, hey, starting May 1st, you're going to have to pay May's rent in full, $800, plus maybe another $100 towards that deferred amount. And you carry that payment plan for the next 4 months to get them current. And you're not charging late fees. But then that amendment also makes very clear that if they don't make those payments on time, or if they default on this, then it's a breach of their lease agreement. They'll be in default and you can proceed with the eviction. Because the reality is right now, we can't file evictions right now. This is another truth. Even though they're in default and in breach of their agreement, you effectively, what the courts have done in the governor's earlier order with all the shutdowns, they have taken away your means as a landlord to enforce, your rights through an eviction, to enforce that contract. So if they don't pay, then you just have to sit back and wait till, the floodgates open. Now, the courts aren't scheduling the hearings. For instance, in Cleveland Municipal Court, where I practice a lot, they're not even taking in any filings. But a lot of the other municipal courts are still taking in filings. So if you have a tenant, now it's April, they won't communicate with you, they won't work with you, and they don't pay their rent, I would advise you to post, your 3-day notice for non-payment of rent like you normally would, and proceed to file an eviction. Because once the courts start scheduling these things or start having hearings, there's going to be a floodgate that opens up, and you'd rather be at the beginning of that line than at the end of it. So the idea is if you are able and you have a tenant when you are in a default situation, get that eviction filed. Chances are the hearing's not going to be scheduled till mid-May or the end of May, or even it could be delayed out further, but at least you're in the queue, so to speak. So, that's one thing you want to do. Now, there is one exception under the CARES Act, that if you have a federally backed mortgage on that property, Fannie Mae, Freddie Mae, a VA loan, and if you're not sure, call your lender to ask them if it's a federally backed mortgage. The CARES Act does preclude you from filing a 3-day notice or a notice of termination of tenancy less than 30 days. And there are a few other, loopholes there. But if you have a private mortgage, if you have it, free and clear, or just a mortgage that's not federally backed, you can still post your notices and proceed, towards the eviction proceeding if you need to. But obviously the goal here is not to evict your tenants. Just as always, an empty property is not making you any money. So you want to make sure that you have it occupied, you have a good relationship with your tenant, that you're working with them, to preserve that tenancy and to maintain your cash flow in some form or fashion. So that's, one of the truths. The other thing that I wanted to touch on before we get in, most of the slides in this deck are going to be related to, the coronavirus and, the CARES Act and the SBA, loan. I'm going to jump, through here. But before I get into the small business, paycheck protection program, which I'm sure a lot of you want to hear about. I want to talk about the executive order that the governor signed into law on Wednesday. So an executive order is a mandate by the governor, and it freaked a lot of people out because at his press conference that day, he made it sound like that, hey, if you were a tenant, you didn't have to pay your rent for 90 days. If you were a borrower, you didn't have to pay your mortgage for 90 days. And it almost sounded like that there was going to be an abatement of those monetary amounts that are due. But when you look into the fine letter of that executive order, my opinion is that it is not a mandate, it is not law. I don't even know if the governor has, the authority to make that type of mandate. He might have the authority to pose a bill to get it through the Ohio legislature, like he did with House Bill 197, and that's signed into law and becomes statute, then, you can do it, but we're not there yet. But in a nutshell, a bird's eye view of the governor's executive order was that it was more or less a request. It was a plea out to landlords. It was a plea out to lenders, asking them to consider the deferment or, that no rents be paid for 90 days to help people through this crisis. If you look at the fine language of that order, the word request is in there. It's requesting landlords to, not accept require rent for 90 days. And it's also then considering the lenders who their borrowers are, you the landlords, to enter into forbearance agreements, which is like the deferred payment agreement I was talking about, but with your lender, to just push that timetable out for payments moving forward. Now, that is, once again, I don't believe that that's a mandate. That's not a law. That was a big ask, from our governor, which I can understand why he's asking that. Everyone is in a panic time, and we do have to work together. So I just wanted to touch briefly on, the governor's, latest executive order. And as you know, the stay-at-home has been extended in Ohio, at least, for another 30 days. And schools are suspended until at least May 1st. And it looks like likely none of our kids are going to be going back to school. So we've been sitting here at our house. I've set up shop in my basement, and I have 4 children, and they've all been, 2 in grade school, 2 in high school. And they've been, essentially homeschooling. And that's been a fun transition, to say the least, but everyone's been busy. And the thing that we found, that really helped our children was to put them on a schedule, wake them up in the morning, break out the times of the day when they're going to be doing their schoolwork, when they're going to be doing their chores, when they're going to have playtime for exercise and, their videos and their screens and all of that. So just a little helpful hint to people, one parent to another. That's been very good. It's been trying everyone's patience to a certain extent, but hopefully everyone's doing well in that regard. So Glenn, do you see any questions popping up there, or do you have anything maybe that you want me to clarify?
No, we've got no questions. We've got no questions to report at this time, David.
Okay, sounds good. Well, I'll just keep going through. And this is going to basically, I want to talk maybe about 10 to 15 minutes, give you the high level overview of the Paycheck Protection Program loans that through the SBA, which was the result of the CARES Act. And the CARES Act, as you see up there, is the Coronavirus Aid, Relief, and Economic Security Act. And this was signed into law, went through the Senate first. The following day, it was passed through the House, and it was signed shortly thereafter by the president, making it a federal law. And I believe it was like 400 and some pages long. It talked about tax relief and stimulus package, and all of that. But I think everyone listening to this is probably a small business owner in some, regard. And the first 100 or so pages of that related to the SBA loans and what the federal government is going to do to help small business owners get through this pandemic and this crisis that we have. And it essentially allocated $350 billion, I think it was actually $349 billion, to go into the SBA fund to create a loan program under the 7A series to help small business owners cover their operating expenses. And it's 100% federally guaranteed loan, to the small businesses that to maintain their payroll during this emergency. That's what they're doing. And there's a really cool piece of this, and we're going to get into it. There's a forgiveness piece. So part of the loan balance that's being, borrowed is going to be forgiven and not have to be paid back if you meet certain criteria. So how do you know if you're eligible or not? That's the big question. And this is a gray area because I think there are some very, black and white, parameters that someone can look at their business and say, yeah, I definitely qualify. And then there are some small business owners in the gray area here that I've gotten a lot of questions on. And so everything is, since this is a brand new act and it's not put into practice, it's going live now with a lot of the SBA lenders. This is not, you have to go through, basically a servicer like Huntington Bank or PNC, one of the big box lenders that actually issue these 7A loans. It's not issued directly from the SBA like the economic disaster loan that was out there a few weeks ago. That was actually applied for directly for on the SBA side, underwritten there, and then issued. It's possible that some of you may have gotten some of that money already. However, this new PPP loan program, you're eligible if you're a small business with less than 500 employees, and otherwise meet the the SSA standard size. If you're a 501c3 with less than 500 employees, so a nonprofit, an individual who operates as a sole proprietor, this is key, or also an individual who operates as an independent contractor, or someone who is self-employed who regularly carries on any trade or business. It's a tribal business concern that meets the SBA size standard, or the 501c19 veteran organization. So key is less than 500, and everything else is ambiguous. So I think this is kind of a broad, sweeping thing to try to include, everybody. So the lenders, what they're looking for, here, they need you to make a couple of statements. First and foremost, you have to show to some extent how you've been hurt by the current pandemic and the crisis. So your business has to have had a slowdown. And I think in good faith, pretty much everyone to some extent, can check that box. You also have to show that you intend to use the proceeds from this loan to retain workers and maintain your payroll obligations. And you can also use them to pay, mortgages if you own the real estate in which your business operates, or to pay the rent if you're a tenant in, a commercial building, and also to a certain extent utility payments. So this isn't supposed to be, a loan that you take that you just plug into your research and development or marketing, you use the capital to increase your marketing. It's basically used to pay the base cost of your business to keep your employees employed. And the idea of that is if you're paying your employees, you don't have to lay them off. They're not going to be applying for unemployment compensation. And it also says to get the PPP loan that you can't have a pending application or a duplicative loan, for purposes, the amounts that are applied here. So you can't also get the economic, disaster loan that was out there a couple of weeks ago from the SBA and this one. If you already have that loan in place, they want you to use the PPP loan to refinance that one into a single loan, if that makes sense. And it also shows that, you had to have been in business as, I believe, March 1st of 2020. So you just can't open up a business today to get this loan. They're going to look at business. Now, here's the thing. So if you're an independent contractor, a sole proprietor, or self-employed to some extent, they're going to be looking, for certain documents to show that, because a lot of sole proprietors that I know, they don't have payroll. They take money as it comes in the form of a draw or a member or an owner distribution. So they're going to be looking for certain documentation to prove that. So if you don't have, if you're not filing 940, 941s on a quarterly basis, and you don't have your annual, payroll, ledger, what else can you show the lender to justify, the loan amount that you're requesting? And we're going to talk about how you figure out how much you need to borrow in a minute here. But being a self-employed person, quite frankly, I'm part of that. I take part of my income through salary through my business, but I also take member draws. So I keep very good records, fortunately. And so I went into QuickBooks and I just printed off a ledger that shows, the draws that I took. And that can be supported, by bank account statements if they want to see it. And they're just looking to see that the money that you're asking for actually went to pay you as an owner, self-employed, person. And I think another thing that lenders will look to support this, if your records aren't that good, is also to just look at your most recent tax returns, because there's going to be an adjusted gross income on there. And if you're a sole proprietor, that's all passing through to you anyhow. So the other cool thing is it doesn't look like they're going to be doing a real staunch credit check on you as a borrower. They're not going to require a personal guarantee for the loan, and it's going to be, collateral free. I heard some initial, things that said if the loan amount was less than $25,000, there was no collateral. But if it was in excess of $25,000, they're going to require collateral in the form of real estate or equipment. But I think that did not make it past the chopping block. So when I read the final rule this morning, I did not see that in there. Doesn't mean that it wasn't. I might have missed it. So stay tuned, and you can look at the rule yourself. So the next question is how much can you borrow? That becomes a very key question, because it says that the max loan amount is $10 million, but that doesn't mean anyone can go out there and get a $10 million loan. So let's go into an example. Excuse me. Say you have to figure out what your average monthly payroll expense was over the last 12 months. And so you figure that out by looking at how much did you pay in payroll. They're not looking at total operating expenses or that. They're looking at what your payroll was. So payroll to your employees and the money that you took yourself as an owner. Maybe you don't have any employees, but you're going to figure out how much you paid yourself, or that you might have been entitled to take the distributions because that would have been the profit from the business over the last 12 months. Say that number is $120,000. We're going to keep the math real simple here. So that's basically gives you an average monthly payroll expense of $10,000 a month. Okay, everyone follow me right now? Hold on one second. I'm doing some math here and I gotta get my calculator up here. Okay, so then you take $10,000 and then you multiply that by 2.5 times. And so that takes you up to $25,000. In theory, that is your loan amount. You can't get more than that, and they shouldn't be able to tell you less than that. So if you were at $240,000 for your average 12-month, your last 12 months of payroll, you divide that, by 10 or by 12, and that gives you $20,000. And so your 2.5 times that would be $50,000 a month. But hopefully that makes sense to everyone. Glenn, you following me so far?
Yep.
Okay. Any questions yet?
We have no questions. You're doing such a good job on this, David, that everyone's following absolutely perfectly.
I interpret that to say that I'm just putting everyone to sleep and I've lost them. So I got to try to do that.
No, this is great info. I mean, I think, I can't imagine a lot of small business owners aren't at least familiar with what's going on, but this is important stuff. If you're not familiar with this, you really need to pay attention and write this down. I mean, this is opening up today, and in my opinion, it's going to be a first come, first served thing. So you want to make sure and get in on the front end of this. It's going to be overwhelming to the systems. And so, you don't want to be sitting here on Monday or Tuesday or Wednesday waiting to find out what you need to do to qualify. I mean, David's got this stuff spot on right here. So, really want to make sure that everybody is following along. And if you've got any questions, put them in the chat box.
Yeah, absolutely. And it looks like I have a lot of people texting my cell phone directly with questions. And I'm just telling everyone there that I'm not going to look at my cell phone anymore because that's getting me distracted. So if you do have questions, please put them into the chat box. But here's something else. What's excluded in calculating the payroll? So if you have any employees or if you yourself are making more than $100,000 a year, they're capping the calculation of the loan amount at $100,000 max per employee. So if you had 3 employees, each making $125,000 a year, you can't take that into, it'd be 375 divided by 12 times 2.5. Each employee would be capped at $100,000. Now, in my case, you could be, or a lot of small businesses, especially if you're taking an S corp election, you may be taking a nominal amount of salary. Maybe you're making, $30,000 a year as a W-2 wage for your business, but you take draws maybe for another 100,000. Well, under that calculation, your annual income would be $130,000. You got to remember, you got to reduce that to $100,000 when you're making your calculation. And I'm hoping that the banks that you're working with are going to be savvy enough to understand this and help walk you through this, because it is very confusing and complicated. But the idea here is that, you're trying to get an amount of a loan to basically cover your costs for the next 2 months. So that's why I think that they're doing 2.5%, because remember, not all of these proceeds have to be used for payroll, but they're also going to go towards rental mortgage payments and utilities. So that's where I think the 0.5% comes in, because the idea is that 75% of your loan proceeds have to be used towards payroll, but 25% can be used towards rent and other utility expenses. And it also, excludes, payroll taxes you pay or railroad retirement taxes. To be honest, I don't even know what those are, and the income taxes you pay, or any compensation to an employee whose principal residence is outside of, the United States. I'm not sure that's going to apply to very many of us here, or qualified sick leave, under, some of the different, qualified plans out there. But that's how you come up, with your payroll cost. And then here's a really cool component of this. So once you figure out how much you qualify for, say it was that $25,000 amount, or maybe it was 50,000, depending on, whatever the scope of your business is. A portion of this loan is going to be a grant, which means you don't have to pay it back. It's going to be forgiven. In the way that what they're going to do, so there's two parts to this loan. There's the front end, that's the application of the loan, that's the determining, the loan amount and applying for and getting that funded. Then there's the back end. What do you do in about 8 weeks? Because the other cool part of this loan, it says that, hey, for the first 60 days of this loan, or the first 2 months, if you can prove, so it's going to be important that you keep good records of how you use these loan funds. If you can show that you use the loan funds to pay payroll first and foremost, and rent amount or mortgage payments and utilities associated with your business, that portion will be forgiven. And in theory, by the way that you calculate the loan amount, it should be 100% of that loan. Now, if there is a portion, keep in mind that if it's not forgiven, you have to pay that back, whatever that is. And the cool thing is it's going to accrue interest at only 1%. I know the initial report said it was only going to be a 0.5% interest rate on this loan, but that actually got changed last night, because once the lenders started, putting in their comments, it became pretty apparent that the lenders issuing these loans, 0.5% wasn't even enough to cover their cost on the money, so they were losing money. So the lenders here don't think that they're doing it for free either. So they're going to charge 1% on this. That's going to cover their cost of the loan, probably a little bit of profit as well, not much. But then the SBA is also going to pay, the application fees directly. So another perk to you as a borrower, as a small business owner, there are no applications fee for you on this loan. So if you can prove that during that first 8-week period that you use the loan proceeds to cover payroll costs, the interest on mortgage obligations, your monthly rental payment or the payment of utilities, that's going to be, forgiven. But remember that the amount of the loan forgiveness cannot exceed the original principal. And I think that goes without saying.
Hey, David, couple questions coming in. We've got the questions working now. And I think you've touched on this, but just to kind of be clear, if you could just restate it, who does qualify for it? So questions are coming in. An LLC, does that qualify? Independent contractors? I mean, can you just kind of touch quickly on, are there any restrictions, for qualifying for the small business?
Yeah. So, I mean, here's the thing. I don't think anybody really knows for sure. But, as long as you have less than 500 employees and you're actively, working in a business or a trade, I think you're going to have a good shot at qualifying. It's going to be an LLC. Maybe you have a partnership and you have 2 partners. You guys are both small business owners, both partners, and so that business can qualify for this. It's supposed to be very far-reaching, and it's to help, the mom and pop businesses out there. That's why they cap it at the 500, employee, because when you get above that, you're getting more into corporate America, and there's probably going to be other stimulus packages, for them. But this is to basically help pretty much anyone who has a small business. Now, from what I read in this, it does, include people who own real estate. So you landlords out there, you have a small business. Even if it's a sole proprietor, that means you don't have an LLC. But if it's an LLC, if you just don't know your name personally, and you can meet this criteria, I think you should be able to, cover that. And the other thing is that you need to maintain your employees. If you have employees, you can't lay them off and still get the loan. If you've laid them off already and they were a full-time employee, then you have to rehire them back before the end of, I think, by June 30th. Otherwise, that portion of the loan will not be forgiven if you've been granted that loan amount. You said there were a couple questions, Glenn?
Yeah, so another question, do you have to have, actual employees or staff in order to qualify for the loan? So if it's just you, are you able to apply for the loan in that regard?
No, I don't believe so. There's no requirement that you have to have, payroll. As many small business owners, they don't have, employees. And I'll talk about this piece. It just came to my mind with independent contractors. But if you're the chief cook and bottle washer in your business, and you can prove that you earn income from that, that's essentially, a payroll expense, and that can be used for the calculation of the loan amount. Now, one of the tricky things that I've had to go back and forth a few times and reread section, it talked about independent contractors. And when I initially read this, I was under the understanding that if you paid independent contractors that weren't employees, that you could use those amounts paid as part of your calculation for your loan amount. And I've actually talked to a couple lenders, and that was their impression as well. But when the final rule, came out, when you're calculating your loan amount on the front end, remember I said there were two parts of this, the front end and the back end. On the front end, payments that you make to independent contractors are excluded from your calculation. And the rationale behind that is that those independent contractors are also small business owners, and they can apply for them. So if you use the money that you paid to them, part of your payroll calculation to get a loan amount, that their compensation would be figured in your loan amount. But then if they can turn around and apply on their own for a certain amount, they can also get it. So they'd almost be double dipping in some sort of form or fashion, and that's not the intent here. So I believe on the front end, even though, believe me, this is just my opinion, remember, that cannot be used in your calculation. But that independent contractor can turn around and go ahead and apply for the loan. But on the back end, when you're calculating your payroll expenses, the monies that you've paid to the independent contractors, I believe, can be calculated into the piece that's forgiven. So this, I believe, is one of the big inconsistencies of the loan. And let's just talk about, I had a good conversation, with a friend who's a pretty high-level investor himself this morning, and he said it makes no sense because he wants to keep his independent contractors busy, but he doesn't have the work, right now because the rents are down. But if he can't get in his loan amount enough money to pay them, then it doesn't meet the purpose of the loan because they're not going to be busy. And conversely, if this independent contractor can turn around and get the loan to basically pay themselves to keep their business going, these contractors then are not going to have any incentive to do the work for you as the business owner. So say you have a carpenter and you need them to do trim work at one of your rentals. Well, if you don't have the money to pay them, you're not going to keep them busy. There's not going to be any work done. Or if this carpenter goes and gets the loan and they get the subsidy and they're paying themselves, they're not going to have any incentive to come do work for you because they've already been paid for the work and now they're working for free or providing the labor. So I think that that's a problem that's going to shake out here and maybe adjusted for, in the coming weeks, but we just have to wait and see how that pans out. But it's an area that, I have a lot of questions, whirling around in my mind, and I'm still trying to process and digest it all. But that's something that, was pointed out to me, and I didn't see it at first, but when my buddy brought it up to me, I do believe it causes a bit of a problem here and confusion naturally.
Yep.
Okay. Do we have any other questions in there?
Yeah, I mean, we've got a lot of questions, David. I'm thinking, why don't we try to, so we have about another 15 minutes.
Yeah.
So why don't you kind of wrap up the PPP presentation here, and then I'll sift through and try to bucketize some of these questions, because there's a few that came back in for the front part of it with relative to the executive order and some kind of best practices for landlords. So why don't you just kind of wrap up with this, and then we'll circle back.
I'm just going to try to summarize, because that's the end. So with the PPP loan, basically you have to figure out, your annual average payroll expense. You divide that number by 12, and then you multiply it by 2.5%, and that's your loan amount. That loan amount is going to be given to you at a 1% interest rate, no application fee, and that's the front end. Once that loan is funded, you use that to basically fund your business for the next 2 months. And the idea is, hopefully in 2 months, we're going to be on the back end of this, slide here, and commerce will be opening up, and you'll be making money again, and you won't need this. That's why it's kind of such a narrow scope. But who knows what's going to happen? It seems like we're learning something new about the virus every day. So that's the front end. And then just to summarize, on the back end, after 2 months, provided you can prove that they were the loan proceeds were used to maintain your payroll and pay, mortgage interest or rent payments and utilities, whatever that number is, when you sum it all up, that amount will be forgiven. So in a nutshell, that's what it is. And so where do you get the money? Remember, you don't go to the SBA directly. You have to go to one of the local servicing banks that issues SBA loans. So an SBA, approved lender, which is going to be most of your big banks like US Bank, PNC, Huntington, Citizens, Fifth Third. I know they all have them. Some local federal credit unions might be offering SBA loans. And if you don't know a verified lender that's nearby you can go to sba.gov, for updates and get a list of, lenders in your area. And here's the other thing. One of the things that the bankers have told me is that they don't want this to be an opportunity for one bank to steal a customer from another bank. They don't want you out there shopping. This loan's going to be consistent to anyone who offers it. So for instance, I know that I bank at, maybe PNC. Since I have an existing relationship with them, only PNC will process my loan. I can't go to Huntington, have them process it. Chances are they're going to say, since you're not an existing bank customer, they're not going to accept your application. They're going to try to redirect you back to whatever institution you're banking with. Now, if you don't, have a relationship with the banking institution that offers the SBA loans, then you just have to let them know, and then they'll take your application. So that kind of wraps up the SBA portion, Glenn, so we can get into some of those questions.
Great. Okay. So we've got we have another presentation at 3 that we'll have to complete by about 2:55. So let me just make a couple comments, and then I'll circle back with some questions. A lot of really good questions in the chat box, but it's physically impossible to hit all of them. Some of them are specific to a situation or someone's specific use case. So that could kind of go down a rat hole. Here's what we're going to do. We're going to export all the questions that are in the chat box, and we're going to try to bucketize them, and then we'll push them back out, to the group, so you can kind of get some high level answers on some of the questions that you have. I think the reality is there are a lot of this that is still a moving target here. I think they were initially going to allow you to call in and apply at 9 this morning. Then it was 2. Then it's 2:30. There's still a lot of moving parts. So just pay attention to it as best you can. Ask as many questions as you can. As David said, reach out to your bank and talk through what you can do to qualify. So I'm going to circle back, David, on a piece that we were talking about initially, and probably just kind of close with that. And again, we'll export these and try to get this out to the full group and share some best practices. But, we were talking on the front end about communicating with your tenants and, what you can and can't do. And, for me, I think this is probably one of the most important things that you can do during this time. I was actually talking to a good friend of mine, Tim, yesterday afternoon, and he had indicated he has probably 3,500 units. And when he was looking at month over month, The first 3 days of April versus the first 3 days of March, he was 96% of collections from where he was month prior. And does that mean that he's got better tenants? Probably not. Maybe. But what it does mean is he's communicating with his tenants, and he stepped us through what he's doing to make sure and stay in front of that. He's reaching out and explaining, if you have an issue, call us, reach out, let us know immediately. Don't just not pay. Let us know. We'll work through things with you. Is sending them information on how to apply for unemployment, just giving them as much resources as he can in communicating on the front end instead of just waiting and seeing what happens. So a couple of the questions, very, very common coming through the chat box, David, is what can and can't you do? If someone says, hey, I can't pay, I lost my job, can you ask for proof of that? If someone says, hey, I can't pay, I have the coronavirus, can you ask for proof for that? Can you send them a link to, the unemployment? What are some of the kind of, lines that we can or can't cross? That seems to be a common question. So I'll throw that over to you for your opinion.
Yeah, I think you can definitely ask them for proof of their hardship, but if they say they've tested positive, for, COVID-19, I don't believe that you should ask them, for proof of that, like a doctor's report or a medical report of some sort, because then you're crossing the line into HIPAA protected material. But, if they are asking, for a reduction or a deferment or an abatement of rent, I do think that you're okay, to provide them, to request, proof of that hardship, if they've been laid off, if they're a restaurant worker, something like that. Also, I think you can, direct them, to resources to help them. One of them is, how to apply for unemployment. The other thing is that there are a lot of, organizations out there that may be offering some help, through church organizations or that. There's a lot of, housing organizations that have funding available to help pay for these type of things. And you can also, I believe, as part of that deferred payment agreement, have them agree now when and if they do receive the stimulus, to have them basically earmark those monies to pay for, their rent that's due to you. So I think all of those, you got to be a little bit careful. But I would say rule of thumb is don't ask them for medical information, but ask them for information that proves that they actually are suffering from a hardship.
Yep. And no issue with providing links to certain resources and that kind of thing.
No, I don't believe so.
Okay. Great. So being that we only have 4 minutes left, David, any kind of final thoughts, kind of just wrapping all three components into, any final statements, any final closing comments you'd like to make?
Yeah, I mean, remember, we're all business owners and we're all in it to make money. And that doesn't mean that you always have to kind of be cutthroat. There does have to be, we're going through unprecedented times here. I don't think any of us have experienced anything like this within our lifetimes. So it's uncharted territories, and there aren't really any best practices. But if you ask me, be a good human first and foremost, be a good person, try to listen and be compassionate, and empathize, with your tenants. If you're a private lender, empathize with, your borrowers. Try to get through this together, because the reality is if everybody goes bankrupt, if everyone has vacancies now, when this all does clear, the economic turmoil is just going to get worse. So the idea here is to work together, come up with a solution that's going to be win-win for everyone, stick to it, get it in writing, and then just take it one day at a time. Because, a week ago, I did, a similar, webinar, and the whole focus was on landlording practices and deferred payment agreements, and that took an hour. And then today it's all the SBA, administration. And then next week it could be something totally different that we don't know about yet. So just have to be able to, roll with the punches, be flexible, and like all good entrepreneurs, just adjust to the changing times quickly and come up with a plan. Don't feel sorry for yourself, because, in every crisis opportunity, there's always opportunities that arise. So in every crisis, there's an opportunity. Just look for that opportunity, and you usually find it, when you help other people solve their problems. So just become a good problem solver, and I'm confident that everyone's going to be okay.
Yep, that's right. Well, David, I really appreciate your time today. This was great. A lot of great feedback in the chat box. Again, what I'm going to do is I'm going to download all these comments in the chat box, try to bucketize them into some general statements, and get that back out to the group. So you've got some pretty good resources here. With what David just talked through. We recorded the session, so we'll have that available too. I think just my final comments. As David said, you got to have a plan. In hope is not a plan. Hope is not a strategy. You definitely need to make sure that you've got a really solid plan. And there was a quote that Josh sent to me over the weekend from Zig Ziglar: "Expect the best, prepare for the worst, and capitalize on what comes." I think that frames it up. I mean, I think everybody's plan should assume what is worst case scenario and start planning around that, getting a good detailed plan that you can execute on in the next 30, 60, 90 days, but expect the best, and work through that. And, good, bad, or indifferent, these are trying times, and we got to take advantage of what we have in front of us. So best of luck to everybody. Stay healthy, and we'll get these questions out to everyone from the chat box. Have a great rest of the week. Have a great weekend, and we'll talk to everybody soon.
Okay, great. Thank you.